minutes. We have a fantastic panel, huge expertise right across the region, and there's a lot of expertise and interest in the room itself. So we want to make this as interactive as possible. This is a $170 billion market across the whole of Asia Pacific. It's big. Over the last decade, it's grown dramatically. But to me, the big question is, why isn't it bigger? Surely it should be a lot bigger than it is today. This is the market we're going to be talking to. 8 REIT markets, although I don't know if you can really call Korea and Thailand a REIT market, but with the exception of Australia, they've really only developed in the last decade. We can come back to this. 8 markets, and then 4 markets in China, India, Indonesia, and Philippines, where REIT regimes are underway and due to be introduced. It's $170 billion. 40% of that or so is in Australia. Another 20% or so is in Japan, just over, and then another 20% nearly is in Singapore. So those 3 big markets account for 80% of the REIT market across the region, Hong Kong another 10%. So you have another range of markets that are all about $1 to $2 billion in size. In terms of the evolution of the market, we can move on. This shows, I think, quite nicely the evolution over the last decade or so, with the big run-up to 2007 to about $210 billion US dollars, and then a big correction back to a third of its size. So 70% almost decline in its size from 210 down to 70 billion in a short space of 2 years. It's now back to 20% below the overall the peak that we're at. What you can't really see here is, though, the relative share, particularly of Hong Kong and Singapore. They are now 20 to 30% bigger than they were at the 2007 peak, whereas Australia and Japan are still behind that. And one other area that REITs are really pushing very hard, I think particularly in Australia, is to do with environmental sustainability rating. There's a lot of other discussions at MIPIM about that, so I'm not going to dwell on that here. If you could just look at the slide, this is the overall performance, and then this is the green buildings, if you like. They're outperforming by 160 basis points. And it's the REITs in Australia that are really pushing this initiative, as they are in other parts of the world.
I work for APG, which is a Dutch pension fund, and we have 3 offices around the world. We've got an office in Amsterdam, one in New York, and in Hong Kong. The reason why we came to Hong Kong in 2007 is because we believe that investing in real estate and real estate securities require local knowledge and local expertise. So, it's great that we can run funds in Asia, out of Europe or out of the US, but you really need to know the underlying assets and the markets. And the only way to do it is if you're on the ground, of course. Japan's interesting. The reason why we also have big exposure in Japan is because of its breadth and depth. I mean, literally in Japan, you can find investment opportunities in any asset class with all types of market exposure that you want. And this is why we like Japan. And the number of players in this market is also huge. And also for Hong Kong, the particularly interesting one is RMB REITs. We know that there are 600 billion RMB sitting offshore in Hong Kong that are non-yield generating at this point. And I would argue that if there are good product offerings, if there are good REITs with great managers, good alignment of interest, then I think the market would be very interested.
So looking back the history of a J-REIT market, it's a mixture of a good thing and bad thing. And as I said, originally it was supposed to be a very modest financial product, but now people know that J-REITs are highly volatile, very somewhat risky financial product, maybe riskier than stocks, and that's the current status. So after the crisis, the only people who could survive was people who were preferred by Japanese mega banks